Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hiding in plain sight within corporate filings. Today we're diving into Cencora Incorporated's latest report. It looks like they've been busy with some big moves and we're going to break down exactly what that means for you. Oh, and before we get started, if you like getting straight answers from these crunchy corporate documents, do us a favor and subscribe. Also, we have a thriving Discord community just for financial sleuths like you, linked in the description below. Let's get cracking. Alright, so Cencora Incorporated filed a report that tells us about some pretty significant events. The earliest date mentioned is the 2nd of February 2026, which is when some key business shaping actions took place. Cencora Incorporated is the company we're looking at. They're incorporated in Delaware, and their main office is in Conshohocken, Pennsylvania. You probably know them if you are involved in the healthcare supply chain or pharmaceuticals. Now, the report also lists the securities that are registered with the exchange. This includes their common stock trading under the symbol CORE on the New York Stock Exchange. They also have some notes related to debt, specifically the 2.875% senior notes due in 2028, which trade under CORE 28. And the 3.625% senior notes due in 2032, trading as CORE 32, also on the New York Stock Exchange. This tells us they're a pretty large publicly traded company with various ways of raising money. We're moving into what they're reporting about their financial performance. Specifically, on the 4th of February 2026, Cencora Incorporated announced their earnings for the fiscal quarter that ended the 31st of December 2025. They've attached a news release about this, which is incorporated here by reference. So, there is more detail in that news release we're not going to read verbatim, but we'll touch on the key takeaways. It is important to note that this information is being provided to the Securities and Exchange Commission, and it is not considered officially filed in a way that would make them legally liable under certain sections of the Exchange Act, unless they specifically say so elsewhere. This section is really interesting because it talks about a major business acquisition. On the 2nd of February 2026, Cencora Incorporated bought most of the shares they didn't already own in a company called OneOncology. Now, OneOncology is described as a national platform that helps independent medical specialty practices, especially those focused on cancer care. The cost for this acquisition was a hefty sum, approximately $4.6 billion, all paid in cash. The good news for OneOncology's current stakeholders is that their affiliated practices and management kept a minority stake, so they're still involved. Cencora funded this big purchase using new debt financing, meaning they borrowed the money. From now on, OneOncology's financial results will be included as part of Cencora's US Healthcare Solutions reportable segment. This is a significant strategic move, expanding Cencora's reach in a critical area of healthcare. Also on the 4th of February 2026, the same day they announced their quarterly earnings, Cencora was holding a conference call and webcast. This was their chance to talk about their financial results for the quarter ending the 31st of December 2025 and answer any questions. They made a link to this call and the presentation slides available on their website, investor.cencora.com. This is standard practice for publicly traded companies to communicate with investors. The filings indicate an Exhibit 99.1, which is the news release from Cencora Incorporated, dated the 4th of February 2026. This is where you'd find the official announcement detailing their financial performance for the quarter. Finally, the report is signed off by James F. Cleary, who holds the title of Executive Vice President and Chief Financial Officer for Cencora. Incorporated, he signed this report on the 4th of February 2026, confirming the information within it. So, let's look at this bigger picture. The big news here is the acquisition of OneOncology for a whopping $4.6 billion. This is a massive investment and clearly shows Cencora's strategy to grow its presence in the oncology sector. It is a bold move funded by debt, which adds financial leverage but also potential risk. They are integrating OneOncology into their US Healthcare Solutions segment, signaling a belief that this part of their business will be a major growth driver. The timing of the acquisition, just before announcing the 31st of December quarter results, suggests they wanted this significant strategic move to be part of the narrative. While the specific numbers from the news release aren't in this direct filing, the fact that they're releasing earnings and discussing a major acquisition simultaneously indicates a focus on growth and market expansion. From a Warren Buffett perspective, this acquisition shows Cencora is willing to make big bets on what they believe are important future growth areas. However, financing such a large deal with debt means they need OneOncology to perform exceptionally well to service that debt and generate a return on investment. We'd need to see the actual earnings report to analyze the numbers, but this acquisition fundamentally changes the shape of Cencora's business. It moves them deeper into a specialized and growing area of healthcare. which could be very rewarding if executed correctly. The risk here lies in the integration itself. Merging companies and their cultures is always challenging, and ensuring OneOncology continues to thrive under new ownership while meeting Cencora's financial expectations will be key. We also need to watch how their debt levels are managed. In conclusion, Cencora Incorporated is making a significant strategic bet on oncology. This acquisition, while potentially lucrative, comes with the financial weight of new debt. Investors will be watching closely to see if this bold move pays off and if OneOncology can truly unlock new growth avenues for Cencora. Alright, that is our breakdown of Cencora's latest filing. What is your take on this massive acquisition and what it signals for the company's future? Do you think it is a smart move or a risky gamble? Drop your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us out, and remember to subscribe for more deep dives into the world of corporate finance. And don't forget to join the conversation on our Discord server. The link is in the description. Thanks for watching, and we'll see you in the next Decode.